Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Abolished in 3 years, the new government in Malaysia has pulled the plug on the GST, which was introduced in the country in 2015, and this despite warnings from credit rating agencies like Moody's. Now, unlike India, Malaysia's GST structure was relatively simple. It has a single rate of 6% with over 30 daily use items being exempt from the GST. Now, on the other hand, India has a 5-tier structure with taxes ranging from 3% to 28%. However, what India and Malaysia had in common was the Anti-Profiteering Authority, among other things. Now, sample this. India's Anti-Profiteering Authority undertook about 325 investigations in its first month of existence. In Australia, the authority undertook 7,000 probes, and in Malaysia, the anti-profiteering clampdown was severe. The authority investigated over 1.8 lakh businesses in its first 30 days. Now, not just that, GST was at some level unpopular in Malaysia from the beginning. The Malaysian government rolled out GST mainly as a source of revenues in 2015 as crude oil prices were below $40 per barrel. Malaysia, remember, relies heavily on oil exports, but the move ended up stoking inflation and had an adverse impact on consumer spending. So safe to say, Malaysia's GST failure does have some lessons for India, but the GST structure and the demographics are vastly different. However, India's GST regime still has some wrinkles that need to be ironed out. The first is invoice matching. Now, this is the process of matching invoice from the vendor with the purchased order and the product receipt. The VAT regime in Europe and the GST regime in Canada do not have the concept of invoice matching. In India, many small and medium enterprises are calling this cumbersome. Not just that, every GST invoice in India needs a GST number and an HSN code, among other details. But this is not necessary in Europe or Canada, making it easier on smaller companies to comply with rules. And last but not the least, return filing. India currently has multiple forms. The government has set the ball rolling for a one-page return, but it could take a year to fructify. On the other hand, in Europe, business filed one return every month, every 3 months and every year. Ditto for Canada, where the return filing form is just one page. So does Malaysia's GST rollback have lessons for us here in India? GST was made an election issue during the Gujarat and the Karnataka elections, with the Congress branding it the Gabbar Singh tax. As we head to 2019, is this a vulnerability that the opposition could exploit? What needs to be done to ensure the GST compliance is simpler, especially for SMEs? To discuss that and more, we're joined by a panel of top tax experts in the country. Prateek Jain of PwC, MS Money of Deloitte, tax expert and lawyer Rohan Shah, also with us, GST Council member from Goa, Mohan Mudino, and Kerala's Finance Minister Thomas Isaac. Gentlemen, appreciate you joining us here on the show. Prateek, if I could start by asking you, and I want to unequivocally point out that I don't think anyone is suggesting that there is even the slightest possibility of a rollback of the GST in India. That is not a question that we're discussing, and that is not a possibility that we're discussing. What we do want to talk about is what are the lessons to be learned from the Malaysian experience to ensure that GST continues to be acceptable and palatable. Prateek, let me start by asking you about what you make of the GST debacle in Malaysia, and if we can draw any parallels or lessons here for India.
Look, I think in Malaysia's decision seems to be more political than economical. Obviously, at that point in time when GST came in 2015, oil prices were around $37 per barrel. Now it is around $80 per barrel. So in that sense, they have that confidence that they will get that revenue, from oil, and not GST is not required. But having said that, I mean, GST has been proved to be across the globe, and more than 150 countries have that, a tried and tested formula, because it taxes consumption and all the benefits that you have. Now, a couple of things which I would say perhaps did not work there. One was that they could not control the inflation, which is again different from what is happening in India, because I think India has done quite well in terms of controlling the inflation. The second is a lot of smaller businesses had to shut their shops in Malaysia, and I think that's a big learning for us, that if we want our GST to be successful, we have to be very careful about what's the impact on smaller businesses. And obviously you talked about the return simplification. I think in last 10 months you have seen government doing a lot, I mean, composition limit extended to 1.5 crores and several of such measures, and now return simplification. So that's happening. And other is, of course, anti-profiteering that you pointed out. And we have been saying for a long time that, anti-profiteering could just lead to explosion in litigation, and that's something which the government needs to
but it hasn't. It hasn't so far, and hopefully we're not going to go down the Malaysia route. Pratik, hang in there. I've got the Kerala Finance Minister Thomas Isaac here with us. Mr. Isaac, appreciate you joining us here on CNBC TV18. A quick question, sir. We are discussing lessons to be learned from the debacle of the GST that we're seeing in Malaysia. And while it's not easy to draw parallels between Malaysia and India, very two different countries, different demographics, very different GST structure, as Pratik was pointing out, one of the issues in Malaysia was inflation spiraling out of control. In India, so far, that has not been the case. But the impact on small and medium businesses, that pain has been felt in India as well. One of the challenges that India is facing in terms of compliance is this business of invoice matching, return filing. Do you believe that now the council needs to focus much more on ensuring that GST is palatable, acceptable, and easy for SMEs to deal with?
Well, India has an advantage. We have been on that, but I don't think Malaysia was on that. GST is only an extension to national scale, the VAT tax system that existed in the states. Therefore, the break with the past is not that sharp in India as in Malaysia and some other countries which have the VAT. That, I think, is a major difference. Second is that India, fortunately, have a relatively lower rate of inflation, just helped by the falling prices in the crude oil prices, and also demonetization. But now inflation is rearing up ahead, and we all very well know that there has been a profit inflation as a result of the introduction of GST, because the reduction in the tax burden, and there has not been proportional reduction in the MRP prices. So that's a point that we have to pay attention. And secondly, I think we are not learning the lessons. You see, there is a to have digital payment concession tax rate for digital payments, and that's going to make, I tell you, the small traders very, very unhappy, because they are very badly hit by demonetization. They feel they are at a disadvantage despite the raising of the percentage tax rate, especially on rupee. And now,
so let me ask you two specific questions, Mr. Isaac. Let me ask you two specific questions. You're saying that digital incentives should be thought through very carefully. The GOM that's been set up by the GST Council has not arrived at a decision on taking that forward. Let me ask you about the two sticky points which SMEs continue to complain about. Invoice matching as well as the invoice details, whether it is the HSN code and all the other line-wise item details that have been asked for. Do you believe that there is a need now to review both those?
And there are different situation in different states. In the state of Kerala, very well, we have been having entire digital invoicing in the past. Therefore, it's not going to be compliance is going to be a very big burden. But there are in other states where it was not the situation. Therefore, they may find it very, very difficult. But what I heard in Kerala is that the merchants feel the intra-state trade insistence from HSN code is going to make it very, very difficult for them to type in everything. And I think the element of simplification is necessary without the basic structure of GST. Okay? So that we know this is a compromise, that something has to be improved over time. So that's the spirit with it, that we have been looking at the reforms in the return form also.
So you admit that some degree of simplification is required when it comes to invoice details and invoice matching and the requirements there. I'll end by asking you, Mr. Isaac, you talked about rising crude prices as well as rising inflation, sir. We're currently given to understand that the government is weighing various options on how it can try and provide some relief to consumers because of the surging petrol and diesel prices, which would also mean that perhaps it is now time for states to bring down VAT as well. While the centre may bring down excise duties, states may also be called upon to bring down VAT. Has there been any conversation with the centre, and are you prepared to move if the centre brings down excise?
No, you don't. We don't accept any conditions. The centre, the states in the last 4 years have not increased the VAT rates at all. Tell me one state which has done that. On the other hand, during the past 4 years, this BJP government has been...
But Mr. Isaac, between 2014, yes, sir, between 2014 and now, there has been a significant jump, not just in excise, but also in VAT rates, sir.
No, sir. No. I can vouch for my state. There has been no rise in the VAT rate. What you are saying is, now because the basic petrol price is rising, retail pricing, VAT is imposed up with an ad valorem rate. The revenue the states get is an additionality they would get. They don't raise the rates. It is a centre which has kicked off the petroleum price rises by increasing the petrol prices by 200%, and diesel prices, the rates by the tax rate by 300%. So issue is very simple.
Okay.
Let them roll back this increase. Things can come back to normal. The petrol will be selling something like 60 rupees per litre. So why say that the centre reduces like state?
That would also mean a significant hit on the government's fists,
by the same logic as you said, if and reduce the excise rate, automatically the tax revenues of states go down. And I promise you, we will never raise that rate to compensate for the reduction in the revenue.
Okay, that's a promise being made by the Kerala Finance Minister that you will not raise VAT rates to compensate for the revenue loss if indeed the centre were to bring down the excise on petrol and diesel. Thomas Isaac, always a pleasure. Appreciate you joining us here on CNBC TV18, the Finance Minister of Kerala there. Let me go across now to MS Money. Money, the point that Mr. Isaac was making there, that the need of the hour is for the GST Council to focus on simplification, not just when it comes to return filing, but some of the other issues where clearly India is unique in the details that we ask for when it comes to invoices and in invoice matching itself. Money, do you believe that there is a need for review?
Shireen, I certainly believe there is a need for review. And I would say that what the Malaysia experience has taught us is that a tax reform of the magnitude of GST, which affects all businesses, has to be acceptable to every single business, especially smaller and medium businesses. Because while large businesses can cope with change at a dramatic pace, smaller businesses have an inability to cope with large volume of change. So my take on Malaysia would be that the learning for India is that a reform of the magnitude of GST, which affects every business and every transaction, needs to be acceptable to everyone. The challenge that we have seen for SMEs is not only in terms of the return filing, it has also been in respect of the various issues, the manner in which the changes have been introduced, the breakneck speed at which we saw changes in the first 6 to 7 months. How do they grapple with all of those? Now, that is where we need to see a lot of simplification in future. My suggestions would be as under. One, we need to have some kind of a moratorium on changes, in the sense that we can't have changes every 20 days and every 1 month and every 1.5 months. We need to have some kind of a roadmap. So if we are planning to expand the sector, for instance, if we are planning to expand real estate, electricity, petroleum, let's have a roadmap for that. And let us say in 2018, December, this is what we do. In 2019, this is what we do. Similarly, in terms of returns and reverse charge and all of those, let's have some kind of a slightly medium-term to long-term roadmap to say that this is what smaller, medium, large businesses will expect, so that people are geared. Because if the smallest, if at the retailer level, GST is not successful, then there is no point in saying it is successful at the manufacturer level.
Okay, Mani, hang in there. Let me go across to Movin Godino, a member of the GST Council from the state of Goa. Mr. Godino, appreciate you joining us. We're talking specifically about the pain points that SMEs are facing, because that has been one of the factors for the debacle of the GST in Malaysia. Blockage of working capital, lack of clarity on invoicing, lack of clarity on the reverse charge mechanism, confusion over HSN codes, definition of supply. People say it's very broad. I mean, these are just some of the issues that have come to us us as we've, traversed this journey of tracking the GST for almost a year now. Mr. Godino, as you just heard MS Money there say, there should be a moratorium on changes so that there is enough time now given to people to stabilize. And two, lay out a roadmap of what you intend to get done over the next 6 months, over the next 12 months, what you intend to include over the next 6 months or 12 months. Isn't that crucial now, Mr. Godino, so that people have visibility, clarity, and there is some predictability?
I think in spite of the initial hiccups and the roadmap what we had envisaged, I can say that we are on a robust road to a good indirect tax system in a large country like India. What roadmap should eventually result in the minimum pain, I should say, for the SMEs and for the small traders and the stakeholders. And I think that is the essence of various decisions taken in the different council meetings that have happened. And we are very conscious that the small trader has to be protected. Small trader should not face the problems that he is facing. And exactly these are things which we have been addressing.
What are the measures that we can expect then to address that? Because I pointed out some very specific pain points that are being felt at this point in time. A, have any of these specific pain points been discussed by the GST Council in any form or fashion? And B, what can we now specifically expect in terms of next steps?
As you know, that has been our focus primarily, because we were aware right from the beginning that maximum noise and maximum pain was really felt by the SMEs. And everyone knows that in this country where we have such a big number of traders in every state, problems are different as far as different regions are concerned. And yet to give them one particular set of roadmap where they all would feel easy that...
Well, we've lost that line there with Moin Godino, but clearly pointing out that the need of the hour is to focus on reducing the pain that's being felt by SMEs. Let me go across to Rohan Shah. Mr. Shah, I appreciate you joining us here on CNBC TV18. I pointed out some of the issues that we're seeing. I'll get back to Mr. Shah as well. Pratik, let's just talk about some of the specific areas that we need to focus on. One, of course, as Mani said, a moratorium on big ticket changes, whether it's inclusion of items like real estate, electricity, etc. But on some of the specific pain points that SMEs are facing, A, I want you to confirm to me whether this is the feedback that you're getting from the ground, and B, what can we then suggest in terms of changes? Staff-related issues, increased compliance cost, additional spending on training staff, incorrect input may lead to penalties. When it comes to the reporting and payment issues, no scope for error as return is filed only once, it can't be revised, lengthy reconciliation process. I mean, these are practical issues. This is the feedback that we're getting from the ground. What's your own assessment?
Absolutely. I mean, I think all of these feedback is quite valid. But I'll just point out here a couple of things. One is, while Mani makes a right point that there has to be a moratorium on changes and some kind of a roadmap, but very difficult to have a roadmap on things like real estate, electricity, etc., because there's no consensus. I mean, you had a roadmap for GST implementation right from 2010, but it could only be implemented from 17 because that is the time when consensus actually came in, right? So I don't think some of these structural things you can have a roadmap. Second is that while whatever you pointed out in terms of the increased compliances and compliance costs and everything else is quite valid, but we have to give credit to the GST Council that they have, obviously we started perhaps with a little bit of flawed kind of structure, but over the last 10 months, they have really put in that effort to simplify. And once this revised new system of return comes in, you don't have that reconciliation issue, at least on the GST end, right? So whatever invoices have been uploaded, you will just get the credit for that. Of course, you will need to ensure that your vendors are compliant, and that's something as an organization you have to ensure. But bulk of this reconciliation related problems, at least through the system, will not be there. I think some of these things like HSN code being on the invoice, etc., government should review what exactly is the need for that and what sort of use they are putting it to. But I'm quite hopeful that next 6-8 months when the revised system comes in, businesses will find it much easier to comply. And also have to bear in mind that VAT and service tax, where they had a very small threshold, and now up to 1.5 crore they're saying composition of just 1%, and they have to pay quarterly tax, they have to file quarterly returns, they don't have any HSN code issue, and so on and so forth. So I think government has been cognizant. I think there have been a lot of challenges, but I guess road ahead looks good to me.
Absolutely. I mean, a lot of the issues that have been raised by people, some of them have been addressed, and of course, as we're pointing out, there are some pending issues that continue to cause pain that require review and attention. Mr. Shah, thanks very much for joining us. We're talking about the lessons possibly that we can learn from the experience in Malaysia, and specifically focusing on the SMEs, where a degree of pain continues. Specifically in terms of review, in terms of modification, in terms of change to reduce the compliance burden, the compliance cost, what would your specific suggestions be?
Yeah. So, Shireen, firstly, as you've rightly said, I don't think Malaysia is really going to sort of be a precursor of what plays out in India. Two things I think are of utmost importance. One, I think when we legislate with so much procedure, like invoice matching, etc., it really comes from a history of not trusting a assessee enough. And surely there were doubts about the amount of revenue we would have collected in the GST. I think the fact that GST collections have stabilized gives us the ability to simplify even further. I think there has to be, especially in terms of the small, medium, a vote of confidence in terms of saying we need to facilitate them further. We need to give them a set of rules which, we will not tinker with over a period of time. And given the robustness of the revenue collections, I believe we've done quite a bit in the past, but I think we need to do more because we need to address that. We need to understand that forms sentiment, although it doesn't form revenue. The major revenue is from your major companies, so don't try and burden the SMEs either in terms of procedure or in terms of investigation, keep that clean. The other situation, and just 2 points I want to make, which I don't think were made earlier. One, in terms of the anti-profiteering, which became such a big issue in Malaysia. I think, we have not gone that path, but there are two things which still trouble me. One, our anti-profiteering is on the premise that a change of rate and a change of credit facilitation alone impacts price. I think that's against every canon of economics. Raw material prices change, competitive factors change. You can't just have a linear approach to say, if tax is reduced and credit is better, I'm effectively going to come at you in anti-profiteering. So we need to have a wider spectrum of appreciation. For example, crude, which you were mentioning, it's an essential raw material for so many industries. If that has gone up, even if taxes have come down in GST, you're going to feel the impact. So I think we need to understand that. The other issue in anti-profiteering, we are saying, make a commensurate reduction. You haven't defined the term, nobody understands the term. So I think, we are pretty much on path. We're doing well, and for a country of our size, I think, in fact, extremely well. There's only one other factor which troubles me, which is the AARs. People are going to state advanced ruling authorities asking for clarifications. The problem is either you're getting things which are absolutely anti-assessee. Old judgments of Supreme Court are being overturned. Tribunal judgments are being overturned. The other problem is AAR in one state won't apply somewhere else. And then we have instances where two states are taking differing views on the same issue. Now, in the administration of taxation, this to me is the other issue that you have to sort out. You had great synergy at the GST Council, but you seem to have great divergence in AARs. And you're overturning old Supreme Court judgments, High Court judgments. So while your points in terms of simplification, I completely endorse that we aren't going the Malaysia route. I think we have our own problems which we continuously should address. And for me, AAR is another of those problems because it is setting back lots of assessees. many of whom are small and medium, whose tax position suddenly has changed to their own detriment.
Well, important points there that you bring to the table, Mr. Shah, in terms of what the government should focus on, more synergy when it comes to the advanced authority for ruling, and also, you know, we really need to be very, very cautious about the anti-profiteering authority and really learn that lesson from the Malaysia example and not go down that route. As Mr. Shah was pointing out, crude prices have gone up, which means that a key input, a key raw material for a lot of consuming industries will see a move up. And if that is not passed on in some form or fashion to consumers, and you have the anti-profiteering authority go after industry, that's going to go down the route of litigation and unnecessary back and forth. But this has been an interesting conversation. We've used the Malaysia example to talk about some of the changes that India must make, especially when it comes to trying to bring down the burden of compliance for small and medium enterprises. As I started by saying, we are in no way suggesting that there is going to be any kind of a rollback with the GST. That is not a possibility that we're at all considering or talking about. We're only trying to learn the lessons from the Malaysia example that can be taken forward here in India. Prateek Jain, Rohan Shah, MS Money, Movin Godino, Thomas Isaac, appreciate you joining us here on the GST Centimeter. With that, it is time for us to wrap up this discussion. Taking a break, there's a lot more coming up. A CNBC TV18 special on the 4 years of the Modi government. Stay right there.